maybe a sort of a minimum sort of target for Bitcoin, like, hey, when does Bitcoin have to reevaluate whether it's peaking is when the value of Bitcoin exceeds the value of above ground gold today. And that's 16 trillion.
Crypto family, welcome back to the channel. That was Tom Lee telling you that Bitcoin is still cheap, and it will be cheap until it at least reaches the market cap of gold. And in today's clip, we're going to watch a recent interview that Tom Lee just did, and he's talking about his Bitcoin price prediction of $150,000 by the end of the year and where Bitcoin is headed next, where he believes BTC will be headed into 2025 and forward. He also touches on the inequalities that we see in the United States, with the poor getting poorer and the rich getting richer because of the dollar losing so much value. He talks about why that's happening and how Bitcoin can help with that. So, highly recommend you guys watch this one all the way to the end. A lot of useful information in today's clip. Leave your thoughts in the comment section below, but let's go ahead and check out today's clip.
One, I would just point out, I think it's easier to have conviction on the longer term price than a shorter term. Because in the short term, there's a lot more factors beyond fundamentals that affect, a price of anything that trades on a market. And for instance, just recently, everything happening out of Germany and Mt. Gox is creating short-term headwinds and, potentially even breaking technical patterns, but it doesn't change where Bitcoin should be 5 years from now. But the price target of 150,000 is actually based on work from our head of digital strategy, Sean Farrell. And he's looking at a combination of his essentially what looks like a stock to flow model and a essential, like basically a price to book model. What is Bitcoin cost to produce, and what is that break even, and what multiple should you assign to that? And he triangulates to 150,000 roughly by the end of the year. And I think that's pretty achievable. I mean, it really principally only happens if the S&P actually can rally into the end of the year, and that's our base case. And, if someone's asking, why should they be interested in Bitcoin? So let's say you have some folks listening to this and are maybe curious, but they're not convinced they should own any. I mean, I think that question has already long been settled because, Bitcoin is now essentially a bona fide asset class. I mean, it has the backing of BlackRock, which is the largest asset manager in the world. Larry Fink even today was speaking post earnings about how important Bitcoin is to the future of BlackRock, and it's something that they're encouraging clients to adopt. I think that the mistake someone might make if they're interested in Bitcoin is thinking they have to go 100% of their portfolio into it. They only need to put 2% or 5%. And, if you think about someone sitting on cash, that's like 1 year's worth of interest on their portfolio. They just have to dedicate to crypto. We made that recommendation when we first wrote about Bitcoin, that they should put 1 to 2%. Today, if they didn't rebalance that recommendation, it's 80% of their total portfolio. So it's been a huge winner for our clients, and many have told us it's really changed their lives by making what they saw as a kind of a low risk bet, 2% allocation into crypto. And I think that's how people should look at it today, because Bitcoin isn't peaking. It's not that widely adopted yet. There's still so many skeptics, and there's many financial firms that are restricting their clients from having access to exchange versions of Bitcoin. So the ETF today is not even approved for many firms, and it tells me that there's still a lot of future holders of crypto. And I think the mistake someone could make today thinking Bitcoin's not relevant is the financial system does work really well in the US for wealthy Americans, but even in America, I think that only 45% of Americans actually have a bank account, and another 25% consider prepaid credit cards and debit cards as their primary form of banking. I mean, banking is very expensive in America, and that's for one of the wealthiest nations in the world. Outside the US, crypto is really going to prove to be a much more low-cost banking system for folks, especially if they want to do remittances and move money around the world. Maybe as sort of a minimum sort of target for Bitcoin like, hey, when does Bitcoin have to reevaluate whether it's peaking is when the value of Bitcoin exceeds the value of above ground gold today. And that's 16 trillion. And the reason I think that's a fair benchmark is that, gold might have some industrial uses and it has jewelry uses, but the principal reason it's got 16 trillion of value is it's viewed as almost a singular hedge against currencies and
Yeah.
against calamity. And to me, Bitcoin is far more resilient and useful if we were ever in a circumstance where you actually need to start using gold. I mean, if you try to, carry $1 million worth of gold,
Yeah.
you probably need a couple friends to help carry that. You can carry $1 million of Bitcoin on a wallet, or in
Right.
your mind if you can memorize your address. So to me, I think it's a far more useful hedge against calamity. But on top of that, of course, it has other uses. In fact, over time, it's arguably going to be pretty widely used, maybe not for direct payments, but as a source of collateral or type of collateral. And
Hmm.
so I don't know. So I mean, it'll be some multiple of what gold is today, but I would say reaching 16 trillion seems somewhat reasonable. There is a lot of inequality. I think it's really unfair uh, because, as you're pointing out, people who are long assets or their lenders or asset owners are benefiting. Um, Now, that does mean, by the way, the best inflation hedge so far has been Bitcoin, right? Because, I mean,
Hmm.
if you compare that, you take the Walmart bill and then put the price of Bitcoin, Bitcoin's done a lot better than anything and would have been a good hedge. But, uh, you know, for as long as I've been following markets, I've heard the same argument that 40% of the country is miserable. And if you look at the Federal Reserve's survey of consumer finances and you build what you think is a normal budget for people, roughly 50% of the country, since I've been following markets, lives paycheck to paycheck. They've never, in fact, 40% of American households are net recipients of transfer of payments from governments. So they don't actually pay taxes. They get payments, like whether it's food stamps, et cetera, or assistance. So America has always had this divide, unfortunately, where roughly half the country doesn't pay taxes, is a recipient of transfer payments. And I think when people post these things, they're getting a megaphone, which is great. I mean, I'd love to see a way to figure out how to have people suffer less, but it's always been the case, actually. I think what the mistake people think is they have to buy a whole Bitcoin and come up with, $63,000. I mean, they can buy a
Hmm.
Satoshi every day, um, instead of a latte. And more importantly, if Bitcoin network value plays out and Bitcoin, yeah, let's take Urian's number, but let's say Bitcoin is 1 million. Okay, so it's a 20 times increase from here. Anyone who's long Bitcoin won't care about inflation, and
Right.
that's the important thing because it's really just the dollar getting cheaper. It's not, I mean, that's really what they're experiencing.